Henry Sink is a pseudonym. Henry stands for high earner, not rich yet. And then Sink is a single income, no kids. So I think that's really kind of important to point out that a lot of my journey so far has been on just a single income salary. I don't have dependents. I don't have a significant other. So it's just kind of, me doing what I'm doing with my money.
Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today. And now, on with the show. Welcome to another Provider Spotlight episode of the Plan B CRNA podcast. My guest today is a CRNA who is taking his finances seriously, and as a result, he's taking them to new heights. Henry Sink is a 2020 CRNA school graduate who is trying to invest early and often to escape the rat race. He lives a simple life while earning more than he used to as an RN, making sure that he is living on less and investing heavily. Henry has dabbled in some real estate while also maximizing workplace retirement accounts and utilizing the backdoor Roth IRA, all with the idea of converting active earned income into passive income. It's great to have you on the show today, Henry.
Hi, hey, how's it going? Good to be here. Thank you so much.
Absolutely, man. Well, okay, before we get going, I know that you wish to remain a bit anonymous, so your video's off. And I also know that Henry Sink is a pseudonym, right? So what does it mean and why did you choose that?
Sure. Yeah. I mean, I really kind of started my investing journey back in 2020 when I did finish school in May of that year and then started working in August. And I was kind of coming up with this idea of like, okay, I'm going from making what an RN used to make to not having an income for almost 3 years. I went through an MSN program. And when I came out and I was like, okay, let me start a social media thing, just kind of like document, what I'm doing with my money and how I'm actually, spending it. And it made the most sense to do something like this, which is from a place of, as Lisa pointed out, anonymity. So Henry Sink is a pseudonym. Henry stands for high earner, not rich yet. And then Sink is a single income, no kids. So I think that's really kind of important to point out that a lot of my journey so far has been on just a single income salary. I don't have dependents. I don't have a significant other. So it's just kind of, me doing what I'm doing with my money.
Yeah. Well, and it does sound like you have a lot going on financially and that you have a pretty clear plan for your financial future. So I guess my question would be, how did you initially become interested? Because I'm sure that this didn't start just as soon as you got done with CRNA school. So how did you actually get interested in those financial matters?
Sure. It's one of those things that I think a lot of people don't know this about me. Maybe they do know this about me. Maybe I've talked about it enough on my social media page. Came to the United States in the early 90s. My family and I moved from the Middle East. So, immigrant mindset of we have to save, save, save. And I watched my parents work incredibly hard. My dad was a former pilot and then just kind of a jack of all trades when we got to the States. And then my mom is a registered nurse. She had worked in labor and delivery in the Middle East, had made the transition to actually having to work in a nursing home when we first got here. And then slowly got credentialed back up to be a full labor and delivery nurse again. Just, credentialing issues when you're coming from a foreign country can be kind of difficult. And, I just thought, man, there's got to be an easier way than just save, save, save because you really can't get ahead. So when I was in school, I was lucky enough to have a program director who really kind of, hounded that into us of like, hey, you guys need to do something really wise with your money once you're getting done. You're going from making, at that time, $75,000 to $100,000 a year as nurses, whether you're in the travel field or not, to making, between, let's say, 175 to almost $300,000, right? As CRNAs, depending on if you're a W-2 or if you're, really grinding it out as a locum in 1099. And I was like, yeah, you know what? That makes sense. And I've kind of always just been very frugal with my money, very much like, hey, what I bring in, like I need to somehow keep a lot of it, but then just that idea of investing. I'd been kind of scared of it when I was younger because like really didn't know like what avenues to look into. And so just kind of, started dabbling back in 2020. And I think I'm slowly starting to understand the process a little bit more, refining the process. I honestly wish I would have started sooner in my early 20s, but I didn't. And so I'm playing, in my opinion, a little bit of catch up. And some people might say like, wow, no, this guy is like kind of ahead of the curve for, where he's at.
Yeah, it's tough. I mean, that's always the thing you hear is like, man, I just wish I'd have started sooner.
Mhm.
And so, yeah, but I do want to take the opportunity to break down each of these financial components that we've mentioned. I want to break them down one by one. So let's first talk about maximizing workplace retirement accounts. Why is this so crucial for people to start doing?
Sure. And I'm going to look at this from the perspective. I've been a W 2 since I came out of school back in 2020. So, what I've been working August of 2020 to 21, 22. So, I'm coming up on about 2.5 years at this point. Started off at a large academic center in the Midwest, and then also here, a large academic center out on the West Coast. So, the opportunities that we had there were a 403B and a 457B, which I believe at that time, each of those accounts you could put away about 20,500, and then it's transitioned out to about 22,500 for this year, if I'm remembering my numbers right. And then we also had kind of like a 401A plan. So really, I mean, it's one of those things that, a lot of people say like, hey, it's great to go 1099, you get all these tax advantages. But then, for the people who are working W 2, sometimes people often overlook that and they're like, oh man, I can start later. I can, start funding these at a later time. From the get-go, I'm like, well, if I can put away something like, 50, $60,000 a year just from workplace, and that's all pre-tax, I'm like, why would I not take advantage of this opportunity? It's just a matter of doing the math, figuring out how much can I put away each month. If I don't see it, I don't care about it. And again, like, I mean, it goes back to that frugality aspect. If I can live on less and I can just keep putting this money into investments, whether it be, ETFs, index funds, whatever you can buy
Mhm.
in those accounts, let me just do it from the get-go.
Yeah. Well, and speaking of that, I mean, what kinds of stocks or ETFs do you have in your portfolio, and why do you take that particular approach opposed to maybe some others that are out there?
Mhm. So I think, mine might be a little bit more focused on just kind of like the US. So I do have Fidelity accounts. So I have like FX, EIX, which is like the Fidelity 500 index fund,
Mhm.
in my Roth IRA, which is also my backdoor Roth IRA because I'm a higher income earner now, which, it's kind of like such a gray area when you talk about like what is like the true definition of what it is, which we can get to that. Obviously, I have a lot of VOO. I think I've got like 106 shares or something like that. But again, that's S&P 500 ETF at that point. And then I
Mhm.
also have a VTSAX, which is the Vanguard Total Stock Market Index Fund. So really, I mean, like I don't dabble as much into international. I'm kind of embarrassed to say I do have some tech stocks here and there. It's mostly in my brokerage account, but my brokerage account, I realized I'm not a very good stock picker. So trying to avoid that as much as possible. Indexing, ETFs, it's the way to go. It's diversified. It's like a no brainer. Just, buy it, reallocate every once in a while, rebalance. But yeah, individual stocks, tried it, burned myself, not doing it again.
Yeah. No, I've had individual stocks and actually done pretty well with them. But the problem that I had was that I had maybe 10 of them or so, and it
Mhm,
only accounted for maybe 5 to max 10% of my portfolio. The rest of them were in index funds and still are. But I was spending so much time watching those individual stocks. And
mhm,
it was one of those things like the index is the index, and so you can look at it and see how it does every day, but yeah, I was spending so much time on those individual stocks that didn't make up even a significant portion of my portfolio. So it was one of those things where
mhm.
eventually I just need to move away from this because I was dabbling and having fun, and then it became something that was more of a headache than anything. So I did eventually move away from that. Yeah.
And I
So
know some people swear by being able to kind of watch that ticker throughout the day and seeing
Mhm.
where's it going and should I buy, should I sell, what are the profits you're going to be walking away with? And
Yeah.
honestly, that's not something that really like piques my interest anymore. If it's something that other people are into, great. But yeah, it's index funds and ETFs, like that is a solid choice, especially with those workplace retirement funds that we did kind of harp on as far as like the 403B, the 457, the 401A. So
Yeah, and the options in those, retirement plans are different,
mhm,
depending on where you work and what kind of a plan they have. But that's something like if you don't have access to good index funds, you can always talk to your retirement plan managers and
mhm,
try to request certain types of funds and their availability into your plan. So that's something to always keep in mind for people. But
And that's actually one of the things that I really appreciate going from my facility in the Midwest to my facility here on the West Coast. They both utilize Fidelity. And
Mhm.
more often than not, I found just, you can buy FXAIX, the Fidelity 500 index fund that I was mentioning. And if you can't find it, there's an option to do a brokerage link account where you're still getting your pre-tax funds moved into there. It's just you have a little bit more of an opportunity to self-manage and self-direct at that point. So you do get a little bit more of a variety of funds rather than here's your S&P 500 index fund, and then here's like a bunch of target date funds. And if you don't choose, we're going to choose for you. And,
Yeah,
you're in your like late 20s and we're giving you bonds. Personally, like I don't have any bonds just because I do want to try to be more aggressive these days. Maybe that's a
sure.
good idea. Maybe it's a bad idea. I don't know. But I mean, for right now, everything is kind of, it's working out, can't say it's perfect, but I'm doing it on my own. And I think that's an important thing for me.
I remember my first 403B, there were three options essentially. So you had an aggressive option, a moderate option, and a conservative option.
Wow.
And that was it. This was
Uh-huh.
back in '06. Now things have obviously gotten better since then. But I chose the most aggressive option because I'm in my mid 20s. At the time, I wasn't looking to retire anytime soon. I had that time horizon that was,
Hmm.
pretty distant. And so, I just went all aggressive. And even that wasn't keeping up with the market because it was just that the way it was structured, it was just funky. I actually eventually I left that place when I went to CRNA school and I
Hmm.
just converted it all to E-Trade, and then I was able to put it in some standard index funds and be done
Oh,
with it.
nice. Yeah.
So, I mean,
Yeah.
now that helped a lot by having that freedom once I got away from that facility, and I know that they've improved their retirement plans since then. But yeah, I
Hmm.
mean, it's taken time for some of those things to evolve. But I do want to move on because you mentioned the backdoor Roth IRA, and
Hmm.
a lot of people hear that term and they may not
Hmm.
understand it. So I was wondering if you could just talk about that a little bit and what your experience has been with it.
Sure. So I think, to even talk about the backdoor Roth IRA, you need to number one, start off with what is an IRA, right? So IRA is just individual retirement account.
Mhm.
So more often than not, it's going to be something that is just completely separate from workplace. This is something that you are funding kind of like on your own. So you get your, money coming in. And I think, this is obviously it's focused very much towards CRNAs, but it might be good information for RNs who are also listening. So you get your money coming in via paycheck, right, from your job. So if you want to potentially get a tax deduction, you can put it into a traditional IRA, and that is going to be pre-tax money. Or it can be a Roth IRA, which, you've already paid the taxes. It's literally money that's sitting in your checking account, your savings account, whatever. So I think what is it? Gosh, I'm gonna, kind of embarrass myself here. Is it 6,500 this year for a single individual, if I remember
And
right?
I'm trying to remember myself, and it's either 6,500 or 7,000. I can't remember which, but it's one of those two. We're not financial
Hmm.
advisors here. We are not
Nope.
financial planners. We are not CPAs, any of those kinds of things. So you do your own research and form your own
Yes.
opinions, as I often say.
Yeah.
Uh,
No, no, I like that. Thank you. Thank you. So I guess, one of the big things that I did during school is I was able to clear out my pre-tax account. I moved any of my pre-tax money from my traditional IRAs into my Roth IRAs, moved a lot of my workplace retirement funds into my Roth IRA, just because when you're in school, if you don't have an income, you're at your lowest income level that you'll ever be, right? So if I'm making no money, that is a perfect time to do this. And a lot of people forget that you need to have a clear traditional IRA to then be able to do the backdoor going forward. So got all that squared away, had, money in my Roth IRA. So moving forward now, I'm a CRNA, making good money, let's say over about $200,000 a year. So I'm above the contribution or above the income limit that the IRS has set out. And this is an
mm,
actual, like the government has said, hey, you make too much money. The loophole, and this is like a legal loophole, a lot of individuals who are higher income earners do this. You have a traditional IRA open and you have a Roth IRA open. Your money is post tax, it goes into the traditional IRA, it settles for a couple days, and then you just move it right into your Roth IRA. There's obviously it's a little bit more that goes into that, but essentially you have a clean and clear traditional IRA. Money comes in, settles, then you move it to your Roth IRA. Obviously, if your traditional IRA still has other funds, then you run into an issue of like the pro rata rule. That's something that individuals can read up on with the IRS website, but it's just better to kind of have that clear. So the way that I'm looking at this is again, like, making over 200K a year as a W-2 employee. What can I do to potentially set myself up for success in the future? Some people might say, oh, $6,500 is not a lot. And they've actually incrementally increased it, over the last
mm,
X amount of decades. And it's, kind of started a smaller amount. But if you really think about it, even if it stays at 6,500 for the next decade, that's still $65,000, right? That you're able to put away.
Hmm.
And then they also have to take into consideration, this is post-tax. I've already paid tax on this. The government can't
Yeah.
come back and say, hey, you owe tax on this at a later date. Because again, that is what Roth means. It is just post-tax money. So my 6,500 from this year, if I get it invested and I am reinvesting those dividends as they come in, whether it be every quarter or once a year, whatever, that's $65,000 at the end of 10 years is not 65,000. It could potentially be worth more, right?
Yeah, sure.
If the market's returning on average 8 to 10%, what am I going to end up with? Granted, it could also go down, but I'd rather get that money, out of my spending, out of my wallet, if you will, and into
Mm.
something where it's going to keep growing for my future. I'm 33 at this point, almost 34. So it's like, I want to keep doing this every single year that I can. And it's intimidating the first time I did it back in, I guess it was 2021, because 2020, I only made about 80,000 because I only started working in August. So I was able to
Okay.
do the Roth IRA. Right. So I've done it for 2021. I've done it for 2022.
Mm.
Just in case I have utilized a CPA just to make sure, hey, am I actually doing this right? Maybe I spent, a few $100s to ask them, to help me fill out a piece of paper. Was it the smartest thing? Maybe not, but at least I know that someone looked over, made sure that the correct, because you have to fill out a form. I think it's like the
Yeah.
8606 form or something like that. Again, not a tax professional or anything like
Yeah.
that. So that's why I brought someone in to help me out with that. So.
Well, and at the end of the day, I mean, it helps to get advice from people who do know and have been through
Hmm.
these experiences before. So, I mean,
Hmm.
whether you have to pay for that information or not, I mean, that's up to the individual. But I mean, those resources are definitely out there for people to find.
Exactly. Yeah.
So I want to move on. I want you
Mhm.
to, if you would, just tell me a little bit about your experience in real estate. What have you done, and what are your plans for the future with that?
Yeah. So I had, again, it's one of those, I wish I would have started sooner, right? So I just said that I'm at 33 this year. Came out of school in 2020, had some friends back in the Midwest that were like, hey, like, you're going to buy a house. And I was like, I mean, I guess I could. And I think my desire of learning real estate really started with my dad back in the day. Again, being the immigrants, my dad was very entrepreneurial, was like, hey, why don't we flip houses? And my mom being a little bit more on the financially conservative side was like, no, what if you fail? And she, really put the fear of financial losses into us. And so that never really came to fruition. Then during CRNA school, I'm driving back and forth for my clinical sites, and I started listening to Bigger Pockets. So Bigger Pockets really started to kind of open my eyes up to the fact of oh, people in their early to mid 20s are doing this. I'm like, I'm in my 30s now and I'm going to be making a lot of money. Why don't I do something with that?
Mhm.
So my first investment, which also was a primary residence, was a house in the Midwest. It is a 3-bed, 2.5 bath, 1,800 square foot townhouse, condo, whatever you want to call it.
Mhm.
But I ended up picking that one up with a physician loan. And a physician loan, also known as a professional loan. There's a couple different names for it. More often than not, these are geared towards MD, DO, DDS, you name it,
Mhm.
physicians. So also known as professional loans. So what I did is I started calling around to a couple different loan providers, explaining who I was, what I did, what a CRNA actually is, certified registered nurse anesthetist. This is our credentialing. This is the schooling we go through. This is the income level. Finally found one that was willing to work with me. And so I was able to buy this place for, 378. No money down, no PMI, 30-year fixed, slightly higher than normal rate. But I mean, rates were really low at that time. So I'm locked in with that place at
Nice.
3.75%. Yeah. Thank you. Thank you. So the mortgage, so I'm getting rent on that right now from just a single lady that I found as a renter. She's been super awesome to me, communicate on the regular, but the amount that she's paying not only covers the mortgage, but then it also covers any of the other, principal interest taxes, incidentals. It covers for, anything that could potentially happen to the house. So I'm happy about that. I can't say I'm cash flowing amazingly by any means, but it was a
Yeah.
brand new build when I bought it. So at least it's something that I've got tucked away. Then this last year, I was moving out to the West Coast and I really wanted to pick up another property. Here, I'd say on the West Coast, it's not so much cash flow as it is appreciation. I ended up
Mhm.
finding a duplex, paid a lot for this duplex, and I'm still kind of racking my mind around the numbers that I paid. But my realtor and I can't say, when I say we, I mean me and my realtor, we kind of calculated it out, picked up for about 635. We put in, originally it was going to be about 50,000, ended up being closer to 80,000, but our ARV is going to be closer on to about 800. So
Oh,
I think yeah, I mean, we're going to make a decent spread on it right now. So one of the units I'm in, and then the other unit is rented out to a really nice couple that was here from the East Coast. I ended up
okay.
finding them on Furnish Finder, and it's been great. So really, I mean, again, same thing. Like you find good renters by doing your due diligence.
Mhm.
Really, this is not like a jump in head first thing as far as like finding the renters. Is very much like, sorry, I'm trying to describe what I actually did with them. Found them on Furnish Finder, asked for references, made sure that they were good with, background check, credit check, that they were willing to sign a contract with me, that they were able to put down, money for incidentals and whatnot. Made sure that, they're something that I would feel
Yeah.
comfortable, living next to. And at the same time, that $80,000 budget, that was, I mean, we essentially did a full gut job. Like when I took over this place, like
Oh,
we
okay.
had to change out had to change out the floors. We had to change out electrical. So we did like two new panels. We had to change out the entire bathroom. I put in new cabinets. I put in all new appliances. And we put in two windows up front, which are like really large windows. We're in the
Mhm.
process of painting right now. We're doing landscaping. We're doing fencing. And it all adds up. Luckily enough, in the process, I met my neighbor who's very much like a jack of all trades, very hands-on guy. And he's like, you know what? Like, this is something that if you want to do, like, I'm more than happy to help you. Same thing, my brother-in-law's dad really kind of like jumped in and he helped me like, put in the windows, do siding, do a lot of different things. So we were able to save costs, the expense. It did take more time. So it's, what's more valuable, your time or your money? Still kind of early in the process of like, doing things. So I do
Yeah.
want to outsource more things in the future. But again, it's that like, I can save some money by doing this. But it's like, oh, shoot, like this took 2 weeks to do. And it could have taken someone, a professional 2 days to do. I
Yeah.
might have been out a few $1,000s, but it's all balance.
Yeah, I mean, that's the learning curve of it all. Like,
Mhm,
that's when you get into it, you don't know exactly how long certain things are gonna take and exactly how much things are gonna cost. You can budget all you want to, but it's
mhm.
always nice to have that cushion either way. So you're working on it right now. Do you have renters that are already in place and living there, or are you still
Yeah.
actually
Mhm.
working on it? They're there.
Yeah, yeah. So
Okay.
that's the thing. So the inside of the units, I mean, they are beautiful. They look great. I am happy with how they turned out inside. The
Cool.
outside, I'm like, wow, this is
Yeah.
a place like this looks terrible. Like it's mostly hardy board on the front, which is all siding, and that's like yellow in color. And for some reason, we decided to paint a gray splotch just to see how it looked. And unfortunately, the West Coast, the portion of the country that I'm in, just kind of rainy, and we're still in the rainy season, so we have not gotten a chance to really get that done. That and also
Uh,
I've been traveling a little bit, right? So it's kind of difficult to coordinate schedules. I'm hoping to really be back in the city for a little while and actually able to like paint it. But yeah, I mean, it's luckily enough, knock on wood, city hasn't like come up to me and said like, hey, this is a giant eyesore. You need to do something about this. But it's all external stuff. I feel like, the painting should probably take a couple days. Landscaping should take a couple days. Putting up our fence at this point, we had tried to reuse a bunch of boards just to save money. My neighbor's a really frugal guy himself. So we're getting to that. So yeah.
but that's cool that at least, I mean, you've got an opportunity to house hack, you know? I mean,
Yeah. Oh, yeah.
that's
Yeah.
great.
Yeah. And I think, I mean, it's one of those things like being a single individual, I'm still at that point where I'm like, you know what, I'm willing to take like a risk and like live next to people or, even if I really wanted to, my spare bedroom, I could potentially rent out. But it's like one of those things that, CRNA income is so good that even right now, if I'm working an extra shift, even if it's a 10-hour shift, grossing anywhere between 15 to 1800, I'm fine with like living on my own, potentially like, I think, paying a little less than 2 grand. My tenants are paying a little bit more than 2 grand. I mean, overall, the mortgage, it's abysmal to say. I never thought I'd have a mortgage of $3,900 or be, almost $1 million in debt for mortgages with, only
Mhm.
two properties. But, it's just that is what it is. And, I'm every day I'm hustling, I'm out there working, I'm making sure that like, yeah, I've got cash reserves in case anything happens, because you have to have that. If anything happens to
Yeah.
my property in the Midwest, if anything happens to the property here, I need to be able to cover that. I need to make sure that like, if my income dries up, like what can I do about that? So,
Yeah, for sure.
and we were
Oh,
kind of
go
talking
ahead.
about, oh yeah,
No.
so other real estate endeavors. I was approached by a couple friends from back in the Midwest. They are syndicators now,
Mhm.
which one gentleman is actually an ER doc. He's gone through other properties before. So I actually took a lot of the funds that I had from the Midwest. This might be kind of an unconventional thing. I don't know if you've heard of Mark J. Kohler. He's got the Self-Directed IRA podcast.
Yeah, I've not. I'll have to
Yeah,
check
so
that out.
yeah, check them out if you get a chance. So I really got interested in this idea of like self-directing. And I think that may be where you're kind of transitioning to. So with self-directing, you can actually take funds that you have and you can self-direct that into other endeavors that are not index funds, ETFs, whatever you want to name it. So I just went in on a apartment syndication in Ohio. We're getting ready for a second apartment syndication. And then I was also approached about I'm still trying to wrap my mind around it. I'm doing like my due diligence on my end. There's only information you can do, but an HOA management company in Arizona.
Oh, interesting.
Very
That's
interesting.
that's got to be just something completely different.
It's different, but again, it's one of those things. I am young and I don't want to say I'm dumb, but I am young and I'm willing to try it out. And
Hmm.
so it's one of those things that I have another friend who's a fairly big investor on social media. We've talked quite a bit. We've actually like met up when she's like come to visit. She actually had something to do with the world of anesthesia as an anesthesia rep back in the day. And
Okay.
so I was just chatting with her one day and, she's like, hey, like I've got a friend who's, pulling funds together for syndication or would you want to jump in on it? And I was like, you know what? Let me talk to the person. Let me see what he's all about. Had a Zoom call. I had him send over the information. Again, still doing like my due diligence on it. I think I'll probably go in on that. But the thing is, like, markets are not doing amazing right now as far as like indexes and stocks and whatnot. So it's like, you know what? Real estate is a pretty sure thing.
Mhm.
Why not try it out, with a guaranteed 10% according to, the paperwork that you're able to receive. Obviously, it could be a little bit lower, said, why not? Let me try it out and see how it goes. Because at the end of the day, again, young in my 30s, if it fails, great. At least I can say I tried it out and it didn't work out. But if it succeeds, then, sky's the limit at that point. And I think that's like the really cool thing about real estate is like, there's so many different things you can do. I mean, we talked about a single family, we talked about a duplex. I mean, you yourself, like you are in bigger, more scale at this point. Is that right?
Yeah, yeah. I'm in apartment syndications, so
Yeah.
yeah. And,
So I mean, the fact that like you've got medical professionals jumping in
mhm.
on that is just like the wildest thing to me. And I think that's just like the coolest thing about real estate. And it's not like housing's going away anytime soon. It's not like, these properties are going to go away anytime soon. If anything, like what do they say? Like, properties, they're not making more land, right?
Yeah,
So it's like try to
you
get a
can't
hold of
make
that.
more land. Yeah, yeah.
So
Well, and I think it's interesting because you mentioned about having been an RN and you're making a certain living and that's
mhm.
very good living, it's comfortable, but then you go on and you become a CRNA and all of a sudden you're making a couple hundred grand
Yep.
and you're making top 5% in the country now,
Hmm. Hmm.
in terms of income. And so you are like a lot of CRNAs don't think of themselves as being rich.
Hmm.
And but you're making money that a lot of rich people make. Now, are you making $10 million a year like professional athletes? No. But still, like you're making very, very good income and trying to get people to kind of switch that mindset of, okay, well, I'm in the middle class. It's like, no, you need to start thinking like wealthy people do.
Hmm.
And it seems like you've taken that turn where you're starting to
Hmm.
try to diversify those assets really across a lot of different areas. But I'd like to hear more about how you're actually trying to convert your active income into passive income. Where did you kind of get that idea and what does that look like for you?
Hmm. I think that kind of harps back to almost like I want to say it's that immigrant mindset of like the save, 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 but I get a fairly decent paycheck being a W-2 employee. I do try to work, maybe like 48 hours a week. I'm on 313s right now, which is great. I can pick up a couple extra shifts a week. It's not the end of the world. So once I get that money and once I know like, okay, this is going towards paying off my credit card, pay off my credit card every single month. This is going towards my mortgage. This is going towards any other like incidentals just in case. It's like I'm sitting on a decent amount of like liquidity. So it's like, what can I do? Here's a curveball for you. My sister is actually a CRNA as well.
Oh, okay.
Very lucky about that. Yep, yep, yep. So we have now kind of like broken out of that mindset of just like save, 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 which we saw our parents do. And again, like love my parents, love what they have done for us to get us here to the States and like help us and support us through our education and endeavors. But it's like now we're starting to look at more properties together, and it's
Yeah.
it's one of those things like taking the same thing. She's a very hard worker. She enjoys, the income that she has, but she's like, what am I doing with this money? Like, we have no idea what to do with X amount of dollars sitting in a bank. And it's like, well, why don't we start buying properties as well? And, doing the burr method or whatever method that, will come to us in due time. But same thing. I mean, like I have actually formed an LLC with the Henry Sink name, trying to build that into something. So it's, how do I build content? How do I build and it's a slow process. It is very much. I think I listened to one of your other podcasts where one of your guests had said, like, putting yourself out there, that is a scary thing, right? And actually
Mhm.
making strides towards like helping other people, it is very intimidating for me. But it's also, realizing that like my time is worth more. My time sitting in an operating room, providing anesthesia is paying me more than potentially sitting there typing on, a screen. So it's also how can I utilize my resources? How can I utilize my talents to potentially build a team that can help me kind of like grow from there? So I am starting to, and it is a very terrifying thing, starting to kind of build out like courses based around, the backdoor Roth IRA, based around index fund invest, maybe that transition if you are trying to do the W-2 to 1099 thing, because I think that's the huge thing right
Yeah.
now. A lot of people, they're like, you know what? I liked my W-2 gig. It's been fine. It's been great. It's provided for me. But, if there's opportunities to go elsewhere in the country to have a better quality of life, to be able to spend more time with my family, how can I do that? And so I think that is just an absolutely phenomenal thing that a lot of people don't have access to that information. They don't have potentially access to 1099 individuals because all they do is they show up to a W-2 job. They're working with other W-2 people.
Hmm.
So I really think like that's a big thing. That and also, I don't know, I just have this huge pipe dream that like somehow I can, build out something. And again, like that's why I'm so like ambiguous because I don't know how exactly to go about this, but build out something to help nurses, CRNA students, CRNAs, nurse practitioners be better with their money. We don't
Yeah.
have any financial education. I think that is like one of the most frustrating things. I think I would have been in such a better place. I finished nursing school back in 2011, right? I was in nursing school from 2007 to 2011. If I would have had even one class or someone sat me down and they're like, this is what your paycheck will look like. This is what you can do with your money. This is what you should do with your money. This is literally what an S&P 500 index fund is. I am embarrassed to say I did not even know what that was until my mid 20s because no one had done it. And at the same time, I was not able to take the reins. It's not that it was not that I wasn't able to take the reins on my own. I just didn't take the reins on my own. So I
Yeah.
think, just being a voice of reason and saying like, hey, I've been in your shoes before. I didn't know what to do with my money. This is what I've done with my money. This is how you can also succeed, potentially get out of, the rat race sooner, potentially get out of like, just having to work bedside sooner. I've watched my mom be a nurse for 40 years. I love her,
Hmm.
but 40 years and healthcare does not sound like a great time to me. I have
Yeah.
other things that I can be doing with my life. Like I do like to travel. So that is a big thing that I harp on a lot. And, just kind of balancing working those 60-hour weeks, but also taking time for myself. So,
Yeah, I get what you mean. And I mean, I was a nurse in CRNA for 13 years.
mhm.
And, I was able to walk away about 3.5 years ago.
No,
And,
I love that.
there are parts of it that I miss for sure,
Mhm.
but certainly having my own time freedom has been very valuable to me. And,
Mhm.
there's good and bad about all of it. And I
For
mean,
sure.
it's been nice to have that extra time with my kids and,
Mhm.
extra time with my family, all that kind of stuff is really important to me right now.
Mhm.
So once the kids are out of the house and everything else, and hey, you never know what'll happen. I mean, but
Yeah.
for right now, that's important. But I think the key for me is like, you know, you improve that financial literacy. What it does is it gives you options. It gives you
Of course.
opportunities in different ways. And I mean, that sounds like that's what's really driving you to have created this alter ego, if you will. And you do have an Instagram account. I want to highlight that. It's called the
Mhm.
Finance Focused CRNA. But you already kind of touched on why it's important to improve that financial literacy among healthcare professionals because we make a lot of money
Mhm.
and we don't always know what to do with it. And that lifestyle creep comes in,
Oh
and if
yeah.
you don't pay yourself first and
Mhm.
and put that money away, it's easy to start feeling like, "Oh, well, yeah, I need all these things around me, and I have to buy this and buy that," you know?
Mhm.
And all of a
The
sudden, you
amount
don't
of
have money.
Yeah,
Yeah.
the amount of horror stories that I've heard about, CRNAs coming to the end of school and they're already buying, the new SUV, the new truck. They're already scouting out their, five, $600,000 house, and it's like we talked about this, and I know you're coming out of
Mhm.
school with upwards of let's say $150,000, and now. I mean, the numbers are completely astronomical. Like
Oh, it's
I've got a
crazy.
couple friends who are 200,000 plus in debt of
Mhm.
student loan debt, but then some of them have also gone out and they're going on that trip like right after school, which is a few $1,000s. They are, buying the new house, they are buying the new car, they are buying the designer fashion. And I think you already kind of like mentioned it. It's lifestyle creep. It's keeping up with the Joneses. It's, hey, I deserve this. I was just in school for 3 years. I don't disagree with that. You definitely have earned your spot as a CRNA. You've earned that income, but should you really be spending it on these? It's a liability, right? I
Yeah.
mean, people in the financial space, like they know what's an asset, what's a liability. If that's all you're doing and you're just, you're living in that 4,000 square foot house and you're driving that new truck and the money comes in, the money goes out, are
Yeah.
you when will you retire? What does your life look like? Are you able to actually enjoy it, or are you just scared that every 2 weeks you're gonna have to wait for a paycheck, or every month or whatever?
Mhm.
Because as soon as that money comes in, here comes the tax man and here comes like the debt collector, because like you need to pay off those people. And I think it's just like some people just need a voice of reason of like, hey, you can enjoy your life, just scale back on the things you spend money on, and potentially just like invest more, be a little bit more aggressive when you're like right coming out of school. Even you can start, when you're a nurse at the bedside, right? And it's definitely a balancing act of like, how do you invest for the future while also saving for school, also paying down like potentially your undergrad debt? There's a way to do it. It's a balancing act. But, when people are just spend, 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 it is absolutely terrifying. And I
Sure.
mean, the amount of debt that some of these healthcare professionals have, it's just, sometimes you just want to scream for them, because you're like, how are you not realizing this? This is scary to me. How is it not scary to
Yeah.
you? And they're like, it'll be fine. It's like, will it? I don't know. So, yeah.
Yeah. Yeah. So I do want to touch on like what kind of resources have you come across that have helped you in your own journey into financial literacy? You mentioned Bigger Pockets, the podcast
Mhm.
for real estate
Yeah.
stuff, but what other kinds of resources have you found?
Yeah, I think Bigger Pockets is great because they do have a couple different like avenues. Obviously, real estate I think is their biggest thing, but they also have like Bigger Pockets business and Bigger Pockets money. There's Coach Carson out there. There's
I love
great,
Coach Carson.
so good. So and
He
he
is
just seems
so
like such a
great.
humble guy. Yeah,
He
if
is.
you yeah, he seems amazing. But also like Nerds Guide FI, which is like financial
Mm.
independence. There's so many great social media out there. I think Instagram is like huge these days for sure. I'm trying to think. Let's see what else. White Coat Investor. I know he's a little bit more focused towards like DO, MD, DDS. I understand
Sure.
that, but still a great source of information. It sounds kind of cheesy, but like literally the IRS website. You
Yeah.
have
Yeah.
the ability to like read through some of those like more dense topics. Like that is a great place. Investopedia, even like
Oh yeah.
investopedia.com. You just type in like backdoor Roth IRA, and they have so many great like clickable links of like, what is it? How do you do it? What are the things you need to look out for? Even just talking with like some of my CRNA friends and colleagues. I'm actually going to can I do like a name drop real quick?
Sure.
Oh my gosh. So her name is Jen Zorio. She is one of my friends from the Midwest. We met at the SOFA conference a couple years ago. So what the Society of Opioid Free Anesthesia.
Yep.
And we just hit it off because like she loves finance. She loves talking about like financial independence and financial education. And she's been in the profession definitely longer than me. And it's just one of those things that, like if I ever have a question or I need, some type of like information on something, I'm just like, hey, Jen, have you ever heard about this? She'll get back to me with, information or, here's a link that you can like follow up on. And it's really refreshing to just have, CRNAs who are ahead of me, whether it be, 5, 10, 15, 20 years down the line. They're like, you know what? I didn't fall trap to spending all my money. And now, I'm able to take off X amount of time. I can work a 1099 gig. I can go on, trips with my families. I don't have to worry about, where's the money coming from, because I've set myself up early. I planted my nest egg, X amount of time ago, and it's been growing. Those dividends have been growing. Potentially, if they have equity built up and they were able to pull out equity of the HELOC or something and, buy more property, or then they get into apartment syndication, or, they've started businesses.
Mhm.
And I think that's the crazy thing is it's like, I could have come out of school, so I'm going to be a W-2 employee. I'm going to have this income and that's it. But like here, it's like, I mean, once you really understand how money kind of works and, the freedom that like actually having money can bring, it's like, jumping outside and saying like, hey, I want to start a business. I want to get into real estate. I want to do something that like will scare me, but could potentially like benefit me and others in the long run. I think like that's really what life is kind of about. And I don't know. It's again, it scares me every day to like wake up and be like, man, I feel kind of behind because like I haven't made more, information, more content.
Mhm.
I could be at 1099. I could be making, I mean, some of these people are making what, 300 plus $1,000 a
Oh,
year,
they
like
make some crazy amounts.
some crazy amounts. Yeah. And I'm very happy for them and very supportive of them. For me, I mean, the W-2 life works just fine right now, but it's like, take that money, really do something educational with it and like let it work for you going forward so you can scale back in the future. Granted, if you love the anesthesia and you love going to the hospital at whatever time and providing that in the surgery center, great, complete support to you. But like, don't get yourself in a pickle where you're, coming up on 50, 60 years old and you still have to go to work, not because you want to, but because you have to, right?
Well, that's it. I mean, like all it takes is like, hey, you fall off a ladder and break your wrist, and all of a
Oof.
sudden you can't hold a mask or you can't do things you're
Yeah.
supposed to be able to do. So any number of things can happen for people,
Mhm.
and all of a sudden you have that paycheck that's cut off, and what do you do?
Well,
So
you
I,
still have the 4,000 square foot house and you still have the
we
truck
do,
and you still
yeah,
have that,
exactly.
Italian vacation you got to go on. And it's like, well, and then you might potentially have a significant other who, might have wild spending habits. You might have a lot of kids.
Yeah,
And, just because like I'm single income, no kids, SIMK doesn't mean that other people,
yeah,
don't have kids. And the thing is like, how do you look out for your kids? Like, how do you set up your 529 plan, your
yeah,
UTMA, your UGMA? How do you set your kids up for success where it's like, what? The parents went to school, they got educated, they have this income, but it's like, help your kids out in the future, right? Make sure that, because I mean, if school's already expensive, like I was just looking up, like I think UPenn CRNA school tuition alone was greater than like 200,000. It's like if
true.
school already costs, yeah, yeah, I know, yeah. Just
My
I'm
goodness.
glad you're sitting. I'm glad you're sitting, but
Baby
it's like
man,
it
so my program, I mean, this was back in '09 to 2011, and I paid about 20 grand for the 2
oh my
years for
gosh,
my master's degree. Now that same program is like 50,000 a year, and it's a
yeah,
doctoral for 3 year, and
yeah,
so 50,
which that
60,000
isn't
up front,
bad,
you know?
but I mean
Yeah,
that
I
is
mean,
not
but
bad,
that's
yeah.
the thing is like now the prices are astronomical, but I mean, there's a difference
Mhm.
between like private schools and state schools and all that kind of
Sure,
stuff
mm,
that people just think, oh, well, all I got to do is I got to get it wherever I can, and wherever I get accepted, that's where I'm going to go. And I got to go.
mm,
And I mean, everybody's different. And if that's the way you feel about it, that's great, but you got to make a plan to be able to
yeah.
pay that stuff off afterwards.
Yeah. And
But,
that's actually like one of the things that I ended up doing. Sorry, just harp on this real quickly. I had the
yeah,
choice of I could go to a West Coast school or an East Coast school. I could be paying, let's say 80 to $100,000 a year for 3 years, come out with a crazy amount of loans. Or I did the thing where I looked in the Midwest. I said, yep, life might suck for a couple of years, but I'm going to go there. I'm going to do the best that I can, and then I can leave. And
yeah,
ended up staying in the Midwest a little bit longer than I wanted to. I'll give you that. But like went to a more cost effective program. I can't say that my parents, didn't help me. We had a family event that really caused my parents to realize like, hey, money can't go with us. They did definitely help me out with the tuition. I'll give you that. But it's one of those things that, once the money started coming in, I was like, hey, mom and dad get a piece of this as well. So they've, luckily been getting some money off of me as far as like a thank you, a payment, if you will.
yeah, yeah,
But yeah, but it's one of those things like you make that choice early, like, and you can either go to one of those expensive schools and come out with 200 plus $1,000 in debt, or you can go to the Midwest or, wherever it's a more cost effective program. But yeah.
yeah. Well, I feel like we could talk forever about this stuff, but I know we got
Yeah.
to wrap up.
Uh-huh.
But I want to make sure that there's going to be plenty of listeners that are going to want to reach out to you for more information. So how can they do that?
Sure. So I either have my email, which is literally just Henry Sink CRNA. So that is HenrySinkCRNA @gmail.com. Or I think a lot of people do reach out to me through the Instagram, which is awesome. And that is going to be the underscore. Sorry, I'm just trying to pull it up just so I even
Yeah.
remember. It confuses me sometimes. But like honestly, if they look me up on Instagram, it's just Henry Sink CRNA. My picture is a bunch of like different like syringes filled with like propofol and stocks and whatnot.
Cool.
But it's the_finance_focused_CRNA. So
Very cool. Very cool, man. Well,
yeah.
hey, this has been a lot of fun, man. I appreciate you coming in here today and just, sharing some knowledge with us. So, hey, best of luck in your financial journey. And I hope to talk again soon.
Thank you so much, Bobby. It's been a pleasure.
Henry strongly believes in taking your finances into your own hands. And I couldn't agree more. No one is going to care more about your money than you, especially when you work so hard to earn it. As healthcare providers, we are smart enough to learn how to do this, so long as we prioritize the education piece of everything. And as Henry mentioned, the sooner you get started, the better off you'll be. And that's with the education, and that's with actually saving part of your income. Compound interest is a truly wonderful thing, but it takes time to work. You may not see much difference in just a few years, but a decade, 2 decades or more, you're going to see massive results. That's going to do it for today's show. Make sure you check out the show notes for Henry's information and let us know what you think of the episode and in the reviews. This is Bobby Jones signing off. Until next time, stay safe and take care of each other out there. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.